Welcome back to TechKidFX for another Hbar hedera price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Hbar chart. And in this video I'll be showing you a key area on the Fibonacci that we have lost. And before I get into that part of the technical analysis, make sure that you give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to start the video here on the daily chart by first giving you a recap of what has been happening and what I'm expecting on the long-term scenarios, where you can see that I have this Elliot structure in red, where you can see that Hbar from these low prices that he had been trading within, we saw a very nice bounce to the upside, making it to an all-time high in what I'm terming as a higher Elliot wave count 1 to the upside. And after seeing the all-time high, we started the bear market, where we had been seeing low prices in this massive ABC corrective structure, which took us back to around the $0.0356 mark in what I'm terming as a higher Elliot wave count 2 to the lower side. And after seeing the low for that second wave, whatever we expect next is a bounce to the upside in the formation of a higher Elliot wave count 3. And using the trend based Fibonacci, I have sketched out a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $0.9768 mark, and that is the minimum that I'm expecting Hbar to do on the long-term scenarios. And by first showing you a key level on the Fibonacci that we had managed to break above initially, and at the time of this recording we have lost that key area on the Fibonacci, by connecting the fibs from the low of the first wave down there to the high of that wave 1. For us to say that we are back into the recovery phase, Hbar needs to manage to break above the key area on the Fibonacci, that is the fib level 0.88, which perfectly lies at around the $0.0752 mark. And once we manage to break above that key area on the Fibonacci, then that is enough confirmation that we are back into the formation of that higher Elliot wave count 3 that I'm expecting on the long-term scenarios. And you can see the past few days we had managed to break above it and also made a high above it, and that was very positive, and that signifies that soon we are going to get back into the bull trend and continue pushing even higher. And after making that high at around the $0.08 mark here on the Hbar chart, you can see that on the daily candlesticks we had a very long week here on the daily candlestick, and this is the first indication that the bears are taking over the market, and that means very soon we are going to see a bit of a pullback here on the Hbar chart in what I'm terming as a higher Elliot wave count 2 on the 1 hour chart. So jumping to the 1 hour chart so that I can give you the short-term scenarios that I'm expecting to play out, you can see that Hbar, after making its low at around the $0.0356 mark, we started a very nice bounce to the upside in a move that has been obeying the Elliot wave structures, having that as the first wave, then a wave 2, a wave 3, a wave 4, and then a wave 5, completing an even larger Elliot wave count 1 to the upside. So this whole structure that I have right here, I can term it as a larger Elliot wave count 1. And after making our peak at around the $0.081 mark, then I'm expecting a bit of a pullback in the formation of a second wave before we see a wave 3, then expect a wave 4, then push even higher in the formation of that wave 5. And I can change the color of this Elliot wave structure to red so that you can also spot that difference. And by first giving you a minimum target area to the lower side in the formation of this wave 2, using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, that gives me a minimum retracement area between the fib level 0.382 and the fib level 0.618, and I can mark that target area here on the charts like that. So it is within this target area that I'm expecting to see the low for that second wave, and it is within this target area that I'm expecting to see a reaction of these fib levels before we start another impulsive wave to the upside in what we can term as a higher Elliot wave count 3. But for now we can expect an ABC corrective structure where we can term that as a wave A, then expect a wave B before we continue pushing even lower in the formation of that wave C to fully maximize the formation of that second wave. And in the formation of that second wave, I don't expect a straight sell-off to the lower side. I'm expecting short-term bullish movements, maybe in the formation of that wave B before we continue pushing even lower in the formation of that wave C to fully maximize our target area. So that is what I'm expecting on the short short term and also on the long term scenarios. On the short term scenarios, I'm expecting a bit of a pullback, and here on the 1 hour chart you can also see that we have lost the 20-day MA, which means now that the 20-day MA is acting as resistance, and for us to get back into the bull movement we need to manage to break above the 20-day MA. But as long as we are holding below the 20-day MA, that means it's acting as resistance and fully supports lower movements to the lower side in the formation of that second wave. And also taking a look at the indicators to see what movements will be supported on the RSI, we are trading at around the 47 mark, meaning we have massive room for us to support any movements to the upper side and also to the lower side to fully maximize the formation of that wave 2. And also taking a look at the MACD, we have been able to print a bullish cross, and that means higher prices are still coming our way. And as I have said, we can expect short-term bullish movements before we see that wave C to the lower side to fully maximize our target area. So let's be patient and see how that plays out, and I'll be keeping you updated.